Alrighty, welcome back to CryptoBanter.com. And if you have just joined us, hit the like button, hit the subscribe button, because now we're going into a segment of the show that I'm super excited about. Everyone, of course, is talking about, the Bitcoin price and the numbers and how Bitcoin has appreciated in price this year. And I think by doing that, of course, that's a very important part of Bitcoin. But there's something much bigger that's happened this year, and I think we need to analyze this a lot further, and that is what Bitcoin has become over the years and how Bitcoin fits into the new financial market. So today we're going to be joined by Mike Bicella, and he's from Block Tower Capital, or Block Tower, and we're going to be talking about Bitcoin beyond the price. So this is not a price discussion. This is not about whether Bitcoin will go up or down, but this is about where Bitcoin fits or how Bitcoin created a new market structure. Mike, welcome. We don't have you. We don't hear your microphone. All right, while Mike is sorting out his sound, let's just, all of us just hit the like button, the subscribe button. Let's get that done.
Can you hear me now?
There we go. Now we can hear you. Excellent. Mike, welcome. Welcome to CryptoBanter.com.
Thank you. Good to see you. It's been a while.
It's been a while. Yeah, I think the last time I was at a conference in Hong Kong or somewhere, if I'm not mistaken.
Hong Kong or Toronto, maybe. One of the two. We saw each other at one of the two more recently, but it's been a while. 2020 has been quite a year.
Yeah. Look, I mean, I think it's great that Bitcoin's going out on an all-time high, or seems to be going out on an all-time high, not only in terms of price, but also in terms of sentiment. Yeah. And I think that 2020 has been, for most people, has been a very tough year, and even for some people in crypto, but it's actually for anyone or for the crypto holders, it's been an amazing year. Not only because of price, but also because of how the market structure has changed for Bitcoin. And I wanted to get you on the show because I know that you're an ex-banker. You've come from that financial system. And I want you to give us some perspective about how you see things. So for those people that don't know you, maybe just give us a little bit of background about your background in finance and how you landed up here in crypto.
Yeah, sure. So Mike Bicella, I'm one of the partners here at Block Tower Capital. I spent my previous life, so prior to 2017, I was at a financial firm called Goldman Sachs for roughly 10 years. I spent a brief period of time in the asset management division, and the bulk of my career there was in the securities division, building out cross-asset businesses across North America. And my first introduction to cryptocurrency was actually through one of my partners here, Matthew Getz, who's our CEO. Who him and I worked together actually through the financial crisis at Goldman together, which was kind of an interesting time. And he started introducing me in 2012, 2013, and I kind of dismissed it as not something I could trade. And at that point, I was a bit of a, I was more of a trading mindset. And 2015, 2016 came along, and people on the desk started trading them more at Goldman. And we kind of were bantering a lot about this space for over the course of a few years. And then in 2017, Matthew Getz and my other partner, Ari Paul here, launched Block Tower. I joined them shortly after we launched, and it's both the blink of an eye and a lifetime ago, but 3.5 years later, here we are.
3.5 years later, here we are. Tell us a little bit about where you guys are, if you can disclose. Are you still primarily running funds? Is that primarily what you guys are doing? What kind of funds are you running?
Yeah, so at a high level, we are an alternative asset management firm. We run a handful of strategies across 2 funds.
All right, fantastic. I want to take you back, and I think now that the intro is over and everyone knows who you are and how you fit in, I want to take you back to when the white paper was launched. And I think when the white paper was launched, Bitcoin was supposed to be a peer-to-peer electronic cash system. I think as we went through 2014, 15, 16, we realized that the cash narrative isn't working. They're still talking about in the Lightning Network. And then we created this narrative around a digital gold. Do you think that that's a good narrative? Is that what happened?
It's the cleanest narrative, so it works well, at least in the earliest stages. So I think, right, the white paper was kind of peer-to-peer digital cash, and I think it's evolved from there. And the narrative of store of value, and if you think about any of the talking heads in the space or the large macro fund managers that came out and discussed their views on Bitcoin, a lot of them have drawn the analog to gold and a better version of gold or a more usable version of gold. Because that's kind of the easiest addressable market from a financial product standpoint that it can be applied to. The way I kind of think of it myself is that, you know, Bitcoin is the only one that really trades like a financial asset, and everything else is some form of liquid venture capital. And that's kind of how I carve out those two very distinct assets in my mind. It's sort of Bitcoin and then sort of everything else in terms of trading and investing. And I think the evolution of this space has changed a lot, and a lot of that comes down to the market infrastructure, the market microstructure, the participants. So, you know, the first stages of that were the early exchanges. The next stages were, you know, when we had the CME futures launch in December of 17. Now we've seen kind of a further iteration of more regulated exchanges, regulated derivative products. We've seen, if you think about 2020 and what that's brought out, is a pivot towards more institutionalized execution styles. So spot markets have exploded because most of the institutions that are buying are using one of the major custody and trading providers, and they're going out and buying an old school fashion, which is a kind of a TWAP algorithm execution. And a lot of the derivatives flow has gone away from the crypto native exchanges that you know, you and I have known over the past many years, and are starting to move towards things like the CME. So it's been and we can dive into this further, but 2020 has been a very defining, and this, I'm not saying anything, you know, wildly insightful, yeah, but 2020 has really been a defining year for the Bitcoin and cryptocurrency space as an asset class, which is very different.
So the catalysts for that were obviously COVID and the government responses, the shutdowns, the lockdowns, and the government responses of issuing more dollars or issuing more of whatever currency they were issuing. And that, of course, set up this narrative for gold, or the case for people to buy gold or to buy more finite assets, so that they know, so that we can create some kind of scarcity of supply. And that's really where Bitcoin got the boost, because some people kind of realized and said, hold on a second, this is actually the only finite asset. It has all the qualities that gold has, but it's actually even better because you can divide it more. There's no such big storage fees, etc., etc. That was the macro narrative. What happened from a market structure perspective in 2020 that kind of brought the narrative together with the institutional buying? So if you reflect back on 2020 and say, when this happened, that was a key point, and when that happened, that was a key point, what are your key highlights for 2020?
Yeah, I mean, so the gold, kind of the gold analog is working very well, but I've heard more and more consistently, this is part of my short dollar thesis. So if you think about the $2 trillion CARES Act that was established in earlier this year, we just had another $900 billion program that was approved less than 10 hours after the language was introduced, right? That's crazy if you think about 2008, and after months of deliberation, a $700 billion TARP program was initially shut down. Now we're printing capital, unprecedented rate. It's getting done at a clip that we've never seen before. And so a lot of folks are concerned about US dollar exposure, the mass printing and central banks. The things that have helped the narrative, I guess, marry with market infrastructure that's allowed institutions to get in have been, again, it's regulation and regulated players. And so there's now a handful of custodians. So a year ago, we didn't have a single custodian that had SOC 1 and SOC 2 audit approvals. Now we've got roughly, I think, 4 or 5 at this point.
Who are those custodians? We've got BitGo. What is one of those custodians?
So yeah, there's Gemini, Coinbase, Fidelity, BitGo. I'm not as familiar with some of maybe the offshore ones, so there could be others, but those are the ones I'm very familiar with. And you know, the majority of institutions that are looking to allocate to the space are using generally those folks as well, where they have an execution strategy paired with a custody strategy. And I believe Anchorage as well is another one.
There we go. Yeah. So you've got this. You've got these custodians. They now audited, approved, etc. What else? What else has happened? What else happened in 2020 to marry the macro environment to people actually being able to action this?
Yeah, I mean, I mean, from an institutional perspective, it's really been that, and it's sort of it's a little bit cyclical or circular, because the macro narrative parlayed into the interest in the space, which drove flows in, which kind of created a bit more of an institutional market from a price discovery standpoint, because those flows are driven into spot markets. Spot markets has much better price discovery than derivative markets. You saw a lot of the derivatives leverage flush out in March. It's come back a bit, but not nearly as large. And a lot of the derivatives that have come back have pivoted into the CME products, which are regulated, where folks like Renaissance and Two Sigma and Citadel are playing, versus the random super levered trader sitting in South Korea, for example.
Yeah, I mean, I must say, I think I agree with you that the move of the leverage trade into the futures, the CME markets, I think that was also a big step. And I think that's happening for Ethereum soon. I mean, I think we can look forward to an Ethereum market opening like that.
Yeah. So these futures are slated for early Q1 next year. You've also got, I mean, we'll see, but the DM, which was the rebranded Libra, supposedly is issuing their US dollar peg stablecoin in the earlier part of the year, which I think will be interesting to see. There's an enormous amount of work being done in the CBDC space. Actually, Goldman put out an amazing report diving into that world. One of the best kind of well thought out pieces I've seen on it. The old guard is really diving in. I think actually Jeff Curry, who's the chief commodity strategist, he runs all of commodity research for Goldman for many years, and I always thought he was a very, very bright guy. He just came out with a piece, his most recent commodities note, where he's basically said gold and Bitcoin can coexist. They represent two very different types of hedges, and then he went into sort of look at kind of backward looking price performance. And Bitcoin this year, for example, has actually traded more in line with copper, which is a risk on asset, than gold, which is a risk off asset. And Bitcoin more represents a retail reflation trade than an inflation trade. And it's interesting to hear his views on this, and I obviously respect him very much. The one thing he did that he told me a long time ago on a trip to Canada that always stuck with me is he said, long-term commodity price is determined by supply. Short-term commodity price is dictated by demand. And if you think about Bitcoin, like you said earlier, there is a finite supply. There is there's a stable supply mechanism that's never going to change, and that will drive Bitcoin long-term price higher, right? The fluctuation will come in and out with institutional demand and retail demand. And we talked about what's helped the narrative meet the market. Retail side, it's been things like PayPal and Venmo eventually next year. It's been things like Square. This is all going to be enormous in terms of inflows for this space, but the institutional side is changing because of the stuff we mentioned earlier.
How important is retail in the new market structure? And I mean, we're talking about a forward-looking market structure, not a backward-looking market structure. I think retail certainly introduced through the frenzy of buying in 2017, and I know a lot of people got burnt in that frenzy of buying, but that is what it really introduced Bitcoin to, the man in the street, the investors. Now, I think that this wave is kind of independent of retail. I don't think retail can make a dent. When you've got companies like MicroStrategy and other companies who are buying through Grayscale or not through Grayscale, they're buying hundreds of millions of dollars. They're buying billions of dollars. The average retail investor on PayPal is probably buying $1,000 or $100. How important is the retail investor now, and how important is the retail investor in the next 5 years?
So retail will be continued, I think, to lose its impact, but will always be important. I think the retail understanding of the space is critical. I think those flows still do matter. I think the hundreds of millions of users in PayPal and Venmo and Square and Kakao and Line and internationally will add quite a bit to the demand side of the picture. But yeah, I mean, it pales in comparison to Mass Mutual lobbing in $100 million every 6 months into Bitcoin. Or MicroStrategy issuing another, $500 million convert to buy more Bitcoin. And that's going to continue to progress. I mean, many of the folks that we're speaking with are large asset managers of some sort, whether it's a traditional asset manager, an insurance company, pensions, endowments. The endowments foundation side, everyone already knows is in, so that's not really that exciting. But the pension side of the world, the insurance side of the world is actually really interesting because they have, a lot of their investing is driven by liabilities, LDI, liability-driven investing. And with fixed income markets, the way they currently are and the way I think the forward outlook is for them, you need to find these alternative assets that you can actually deploy real capital into. And Bitcoin, being a fairly deep market, represents that for them. But I think the reason that we got excited to launch hedge funds in this space initially was because it was basically traditional markets on its head. It was 90% retail and 10% institutional. when we launched the funds. That's obviously changed quite a bit, but it's still nowhere near the, call it 95% institutional, 5% retail world of equity markets, for example. So we're getting there. Institutions are very much in the headlines and buying in this space. Between, you have folks like Mass Mutual, you have MicroStrategy, you have One River up in Greenwich, another, traditional macro fund that's buying $1 billion of Bitcoin. You have the folks at Guggenheim, right? Their macro fund is going to put 10% exposure in the space. So those will continue to happen. There's a lot that has happened that hasn't been reported yet. So that'll be exciting as that drops in the next, call it 6 months. So yeah, I mean, it's retail continues to be important. It also is a helpful narrative when you're talking about things like PayPal opening up crypto to their ecosystem. And I'm sure the 4Q numbers will be monstrous relative to 3Q for companies like Square.
Yeah. Also, when you look at like MicroStrategy, I thought that when he came out and said, "Oh, we raised the money. Oh, we bought at 21,000. We bought at an average price of 21,000." I kind of like went, "Whoa, hold on! You just went in and bought at 21,000." But today he looks like a genius. Today,
yeah, and when that was announced, it was trading below that acquisition price. Yeah, and he was proud of it. He didn't care.
Yeah. So I guess that's my question, because you know how these funds and insurance companies and everyone else operates. I mean, are these people trying to time the market at all? Or are they saying, look, we've got conviction in Bitcoin. We think it's a 10x asset. Whether we pay 25, 28 or 30,000 doesn't matter to us.
Yeah, that's the exciting part, is institutions view an asset allocation within the broader construct of their portfolio. So the reason Bitcoin remains attractive is because it represents a different return stream. The correlation within its broader portfolio is very low, which means you're reducing the overall risk of your portfolio by integrating Bitcoin in some level. We saw it again, actually. Chris Wood, who is a great strategist, who's now with Jefferies, but for a long time was with CLSA, which is one of the top research houses globally. He puts out this thing called a greed and fear report. He put it out weekly since I think 1996. And for the first time in many years, he actually reduced his gold positioning for global long only pensions. He reduced his gold position from 50% to 45%, retained everything else, but that 5% that he added was actually in Bitcoin. And the other interesting note was, if we see Bitcoin recede from its recent $20,000 high, we would actually say to go out and add to that position. So a pension is not going to be timing the market. They're allocating to the space. That's the exciting part, is that over 2021, you can try and time the market, but the reality is large asset allocators are making decisions at the investment committee level to allocate X% of their portfolio into this space. And it's a completely, I would say, it's almost more of a systematic execution. So they're not going to be sort of in there in a discretionary way trying to pinpoint the highs and lows of January. They don't care. They're buying $500 million over the course of 6 to 12 months.
So I've heard theories, and I don't think it's theories. I think it's actually quite factual, to say that as the market cap of Bitcoin goes up, so when Bitcoin was a $300 billion asset, it wasn't that attractive. When it gets to 500, it becomes something that they got to look at. When it gets to $1 trillion, you've got to hold it. And so actually, the more Bitcoin increases, the more these guys actually pay attention, not the less these guys pay attention, because it's starting to get too expensive for them. It actually makes it into an asset class which now becomes investable.
Yeah, it's similar to anything else that we've seen. It's similar to, Yale being one of the earliest investors in private equity. And once that became a large market, others followed. Venture capital, similarly. And now something like Bitcoin, where, and likely at those higher levels, we'll have seen a even more firm regulatory framework. So the sandbox opens up and allows institutions to feel more comfortable investing in the space, because at, multiple trillions of dollars, you're at a point where you're kind of disrupting central bank policy. And so they're going to have to formulate some regulations around this. And that's what a lot of them are really waiting for. Some of the more progressive folks decided to move first because they kind of see the writing on the wall. And then you have, I was impressed that the folks, so there was an article about Ruffer out in the UK, which is a large asset manager, and they're known to be very conservative. They're actually, the nickname for them is the Queen's Broker. And so, and they obviously recently took a pretty large, substantial position in Bitcoin. But they also, we got a package here. They also have done interesting things in the past that have, garnered a little bit of notoriety, and sometimes not in the best light, but have worked out well for them. So they were known for being a large player in the volatility space, and that worked out in a big way for them. And now this is kind of one of the next iterations where they go into it saying, we understand this is going to look strange to our traditional investors, but it's something we believe in, and here's the reasons why it works in our portfolio.
So from what you're saying and from what we've seen, the Mavericks have started to come in. The Michael Saylors and the Mavericks in the investment industry have started to come in, and they've started to buy Bitcoin. Question is this a Bitcoin play, or is this a crypto play? Do they even acknowledge the existence of other things, or they're looking at Bitcoin and going, look, there's this digital gold or similar properties of digital gold. It's a hedge against dollar printing and devaluing dollar. We want to buy it, but we don't actually care about the rest of this crypto world and this big supercomputer called Ethereum and these gambling platforms, and whatever else.
Yeah, so there's a spectrum, right? There are the folks who are just like in our world of crypto of the last 5-10 years. It's you have the maximalists, you have the folks who kind of look at everything, and you have the people that are project dedicated. Within institutional world, so I give you an example. There are large pensions where they're allocating, call it 1.5%. It's been approved by the IC, and they're bucketing it into passive allocation, trading strategies, and venture. And so I think Bitcoin is the gateway drug. It has the most products available around it. It has kind of the most broad institutional network of players and products. And so that's why it works well at this point. It can be custodied by a regulated custodian, which is another big kind of hurdle. But there are endowments and foundations that directly own assets outside of Bitcoin. And again, I think for us and who spend 24/7 in this market, we are very well aware of kind of the flow down effect of wealth from Bitcoin acceleration. And you kind of try and play those cycles, trade those cycles, because a lot of we obviously firmly believe in the development of Web 3.0 and the evolution of the internet and how much of a factor this will play in that. And so those things for us, again, represent liquid venture capital where we can kind of go towards what's working and away from what's not. And that's exciting because, Bitcoin, listen, Bitcoin may go to, whatever, name your price target. It doesn't matter to me. Right. But there's also emerging projects that are super exciting that can be 100Xs, 1,000Xs, 2,000Xs over the course of the next year. And you can't ignore that, particularly if it's your job to be in this space 24/7, you can't ignore that. But guess what? The CIO of CalSTRS is probably not going to dive into a new DeFi project anytime soon.
I mean, from what you're saying, we've literally just scraped the surface. We thought we had scraped the surface in 2017, but that was us retail rookies just messing around with digital money. Now we're saying that the Mavericks in institutions are starting to understand this asset class. Let's go. I know you pushed for time, so let's go into 2021 and market structure 2021. What are the key highlights that you're looking for in 2021 to confirm your thesis? To almost say, look, this is what I'm expecting. This is happening.
So again, for us in the hedge fund side, and just broadly speaking, I think for anyone trading in the space or investing in the space, things like prime brokerage will be a big growth area. Synthetics, so synthetic products. I think just execution, again, being able to tap into certain markets from a liquidity standpoint. It's still a lot of the basic build out of traditional finance that's going to, I think, be a big area of growth for the space next year. Within the actual underlying assets themselves, I think the progression of Bitcoin as an institutional asset will grow enormously. I think that's going to be one of the biggest themes next year. I think also next year we're running into a significant layer one war again, which we haven't seen in a while, which would be pretty exciting. I think DeFi is going to kind of dust off its shoulders, and we'll see a kind of a new group of entrants that are better versions or iterations of what we've had previously, and a more kind of mature market than we saw this summer. So it's a lot. There's a lot of exciting things. I mean, Bitcoin obviously for the rest of the world is very exciting, but for us and internally in the space, like yourself and us here at Block Tower, there's a lot going on next year that's going to be really exciting for us to dive into.
We seem one step ahead. I'm actually going to get you back to talk about the other stuff that you're excited about. I just want to go into one more thing. I know you are pressed for time, but let's look at this. This is something that I picked up on Twitter on an account called KE Rook, and I think it's genius because what he's done is he's created Bitcoin Bingo. And I want to go through some of these things with you and see whether you agree or whether you think that they're going to happen. So GBTC AUM overtakes GLD AUM. Now, just for perspective, GBTC has got an AUM of about $16 billion, and GLD has got an AUM of about $70 billion. So you're talking about a 4.5x increase. Do you think that GBTC finishes 2021 higher than GLD?
I'm a big fan of Barry Silbert, but because the bottom left square is a potential for next year in my head, I'm going to say no.
And you don't think that if an ETF came out, it would be an ETF around Grayscale?
No, I have a feeling it would be something slightly different.
You have, okay, you seem to have a hunch.
I have a hunch. That's it. That's all I can say on that.
All right, let's look at one or two of the other things. So we know that Square has bought Bitcoin. Do you think Twitter starts buying Bitcoin?
Yes.
Okay, amazing. DCG, you said you're a big fan of Barry Silbert. I'm a huge fan of what he's done. I mean, these guys own pretty much everything in the space, or have shares in everything in the space. He kind of started really early. Do you see DCG listing in 2021?
Well, I'm sure every SPAC in existence is probably banging on his door. No, I think it stay. I mean, if I'm him, I stay private, hang tight for another year.
I think the way that he's operated, and he's operated quietly. He takes shares in lots of different companies. They sometimes start off with minority shares and they keep increasing their shares. I've never seen an operator like that before. He's one of the most impressive guys I've ever come across. He's impressive. I've heard him speak. The guy is super impressive, but he also stays under the radar. Let's look at one or two more before I let you go. So Binance going public, yes or no?
Yes, I actually do see that. I could probably see it in the, again, I think that would be, again, there's an enormous amount of SPAC paper that has been generated, $300 billion this year. They're all looking for targets. Binance is a absolutely gem darling in this space. And I think, I would say outside of any severe regulatory hurdles that would need to be cleared, it makes sense for them to be public.
And it goes public in the United States, not somewhere like Singapore or Hong Kong, or somewhere where it's more crypto friendly and CZ friendly. And
no, I think it's non-US, and then there may be a dual listing some point in the future in the US, but I think it's non-US to start.
All righty, so let's look at one or two more. City of Miami buys Bitcoin. We're actually getting the mayor of the city of Miami onto our show. Do you believe that Francis Suarez?
Now, is this the city or himself?
Well, I think he is a Bitcoin. He must be a Bitcoin holder. He's spoken at crypto conferences.
And no, I don't think so. Unfortunately, politics are politics.
Well, he's going to get onto my show next week, and I'm going to try and get him to buy it on our show next week. All right, let's go one more because I know you are pressed for time. Cash App hits the #1 in the US App Store. Yes or no?
I'm not young and trendy to know what's going to be a #1 app anymore. Sure, why not? Go Dorsey.
All right, Mike, I know you've pushed for time. Thank you. I know we only got hold of you today and said, listen, or yesterday and said, come on to our show today. Let's talk about the Bitcoin macro. I couldn't think of a better way to end this year. Bitcoin going out on a high. I think we're also going out on a high, laying out this market structure. So thank you very much.
Yeah, thanks. Same here. It was a good one. Happy 2021. We'll see you in the new year. And
to you. Thank you very much, my friend.
Bye-bye.
Very good to see you again. And that, of course, brings us to the end of the show and the end of our 2020 programming. We're going to be back again next year, sometime around the 3rd or 4th of January, or we'll come back if there's any amazing news out on the airwaves. If you are watching this, hit the like and subscribe button. I want to thank you, the community. I want to thank my producers. I want to thank you, the community, for supporting us, not only here, but also on the Telegram group, for following our journey, and of course, for hitting the like button and hitting the subscribe button. I'll see you all again next year. If you are trading, trade well, my friends. Have a happy new year. And we'll talk again early in the new year. Thank you for logging in. Thank you for hitting the like button, subscribe button, and thank you for being the most amazing community in the whole wide world.